Bitcoin has been up over the last couple of days, but it hasn't been all sunshine and roses. This level right here, we're looking at the super trend indicator level, this resistance here at about $110,000. This level has been absolutely key, and Bitcoin so far has not been able to overtake it. Once it actually does close above the super trend indicator level here at above 110, that means that it will flip to a buy, and that's going to be absolutely massive for Bitcoin from a technical analysis perspective. So look for that to happen. This resistance level right here has held so far. Bears have kind of dug their feet into the sand, and that's one of the reasons why Bitcoin hasn't gone up much higher, is because the sellers have been protecting this level very heavily. In fact, if we take a look at the Bitcoin liquidation heat map, we can see here that there's a massive liquidity level sitting right at 110,000, where the shorts have basically planted their flag in the sand right now at about $163 million worth of short liquidity sitting here at that level. So if we do actually get a nice move above there, we are very likely going to see a pop above that level, and maybe even into, I would say, 115. I don't think that's too out of the question. Bitcoin has been also very busy when it comes to the options. I always like to make sure I cover the options. Put to call ratio sitting at about 0.9, so the market is actually a little bit more bearish in the near term than it has been in the past. And we see a max pain price of about 105,000. This compares to where Bitcoin is right now at about 108,000. Not a huge surprise here, and traders right now lean more bearish in the near term. They're expecting most likely that the Bitcoin's going to stick near this max pain level, about 105,000. Now, this is based on the expiry of 11 July, and this is about almost 3.4, a little over $3.4 billion worth of options set to expire on that date. So Bitcoin coming this next Friday is going to probably be a little bit volatile. Make sure you guys keep that in mind. Now, one of the reasons why I have to be particularly bullish, though, about Bitcoin in the long term, and that is the Bitcoin spot ETFs. We always take a look at the Bitcoin spot ETF tracker, the weekly. Right now, we're seeing large inflows from these spot ETFs, BlackRock, Fidelity, etc. They're all going in. They're seeing large inflows. We're seeing larger gains for the total net assets. We're sitting at about $137 billion worth of total net assets. And a lot of these companies are having so much interest in traditional investors going and buying these spot ETFs that they're having to go out and buy some more Bitcoin as well. If you take a look at the Bitcoin and crypto fear and greed index, we're sitting here at about 68. Now, this is not terribly high. Usually it does tend to peak out at about 83 or somewhere in like the 80s, the low 80s. So we're not quite there yet, but we are starting to see some strong greed in the current markets. That's primarily the reason why I think that a lot of the traders are near-term bearish, is the fact that we've been actually fairly bullish over the past couple of weeks. In fact, if we go ahead and take a look at the 3 months here, you can see that since the low back in June 23rd, it's been nothing but upside here, going from a low of about 30 all the way up to about 70 or so where we are right now, still stuck in the greed area. Now, if Bitcoin does hit extreme greed, just know that this is going to signify the next level, the next stage of the current bull market that we're in, because it rarely ever comes to extreme greed, and it rarely stays in that area for very long. But Bitcoin has been incredibly popular. We've seen large numbers of companies and individuals going and buying a lot of Bitcoin. Over the last month, you can look at the exchange reserve, the number of coins on exchanges, and we can see here that from June 6th to where we are right now, and this is currently in July 5th, there's about 60,000 Bitcoin or so that left exchanges. So this is pretty huge, because if this rate continues, then in about 3 years or so, we'll see all of the Bitcoin gone from exchanges. And quite frankly, that means that a huge supply shock is going to be coming for Bitcoin. But if it continues at this rate, that would happen in about 3 years or so, which is actually pretty soon, I think, when you think about the Bitcoin cycles and the way Bitcoin is being traded and held long term. 3 years for a Bitcoiner is honestly not that long. In fact, if you take a look at the Treasury holdings, I'm over here on the Bitcoin Treasuries by BitBo. You can see here that this is the changes to the Treasury holdings for certain companies based on their filings. Like, for instance, ARK added 750 Bitcoin, and that was only on the 4th of July, or that was updated on the 4th of July. Grayscale, 300 Bitcoin. iShares Bitcoin Trust, IBIT, 2,000 Bitcoin, 2,000 Bitcoin, huge additions to their own stockpiles there. And you can come here and you can take a look at all of these trusts and ETFs and companies that are actually going out and buying Bitcoin and adding it to their current holdings. So this is the reason why we've seen the exchange reserve go down so low. There just is not going to be enough Bitcoin on exchanges, and this is going to lead to a huge supply shock. If you take a look at the Bitcoin balances for whale addresses, this is also something that tends to spike as well. In fact, this actually went up almost 100,000 or so. Now, this is balance for whale addresses last active within 24 hours, so this is actually pretty recent here, and we see that there's a large jump of about 100,000 Bitcoin from July 3rd to July 4th for these whales. So whales have been loading the boat right now. Now, the last thing I want to talk about is that the stablecoin market cap, we've seen a large increase in the number of stablecoin issuance over the last year. In fact, if you go ahead and take a look at the all-time, you can see here that it kind of peaked out at about April 2022. That was kind of at the absolute low of the last bear market. And then we see here that about November or so, it actually went much higher. It actually crossed into a new level. And now the stablecoin market cap is sitting at about $236 billion, which is the highest that it's ever been for stablecoins. Now, one way you can look at this chart is you could say this kind of shows that there's an increasing liquidity for the crypto community. Another way you can look at it is that if it increases, that means that investors are fleeing to safety, aka the stable coins, and they are not putting their money into altcoins. In fact, and I think that both of those two things can be true. You take a look at the altcoin market cap chart, and you can see here that it really hasn't recovered. We haven't really seen a strong alt season. In fact, to back it out a little bit here, the last true altcoin season we had was maybe back in December, but then it hasn't really recovered since then, and we're sitting well below the market cap that we were back in December. And this would also substantiate that a large number of increasing stable coins and issuance, and also the rising price of Bitcoin shows that there's a lot of investors right now who are kind of concerned. They're playing it easy. They're not really going out and gambling on altcoins. So that's all I've got for today's video. If you guys enjoyed this content, please let me know. Like, subscribe, and also follow me on X and Threads. I greatly appreciate it. I'm Cody the Coin Raptor, and I will catch you guys in the next video.